Marginal dollar, what does that mean still?
The next dollar of income over a certain amount is taxed at a higher rate.
So if you earn $20,000, you're going to pay a rate of like 10% on that.
Right.
And then if you earn 40, you're going to pay 10% on the 20 and a higher rate on the 20 to $40,000.
Exactly.
Okay.
That's the marginal tax rate.
Okay.
And what we're talking about now in this discussion about whether to extend the existing tax rates or let them expire at the end of December is that they are marginal tax rates. They're talking about the 34% rate going to 39.5%. So that's the marginal tax rate on income over about $380,000.
Mm-hmm.
So we're talking, these are marginal tax rates. They don't apply
evenly across your
across
whole
the board.
spectrum, yeah.
Now, if those tax cuts, so-called tax cuts, expire, then the 10% low rate is going to go to 15. So it's going to hit the lowest bracket taxpayer.
Hard.
Hard.
Pretty hard, yeah.
And
it'll take more out of your first $15,000, $10,000.
Your first, whatever the increment is.
So it's interesting. I don't think I've ever understood that marginal piece until you just said it now. But all of us will pay a little bit more on all these steps all the way up. So our rate increase is not going to be like a 3.5 or 4% increase as we see it go from 35 to 39.5. It's going to be all on the way.
Right.
And so it's going to be a bigger percentage.
Yes, and
in actuality.
Now the discussion is sort of narrowed down to which tax bracket are they going to leave the same and which are they going to increase. That is, when they say increase, they're going back to the rates that prevailed before 2002, which were this 15, 20, 28, 35, 39. I think I have that right.
I think you're right, yeah.
So they're talking about this very top 1 or 2% of taxpayers who make more than $250,000 a year. Now you get the top tax bracket, top 1% bracket begins at $380,000 income.
So 1% of the people make $380,000 or more a year.
Yes.
Uh-huh.
So and that's about 1.4 million taxpayers.
That's all.
That's all. So all of those people that you read about that make $50 million, they're in that. There are not very many of them, but they're in that top 1%.
Well, and I think politically, if you were to tie this all to politics too, 1.4 million voters you can throw away if you can appease the other voters. And isn't that a play here too?
That could be a play. Mm-hmm. And that's 1.4 million taxpayers. So it could be more people because 2 people filing as a joint return count as 1 taxpayer. Mm-hmm. So you're talking about this. Now, interesting, in the 2008 tax data, that 1% earned 20% of the adjusted gross income. 20%. Mm-hmm. And they paid 38% of the total individual tax bill.
So the idea that we hear espoused by our local politicians and that we send to Washington that the rich aren't paying their fair share is obviously not true.
It raises a question of what is their fair share. They're paying 38%, do you want them to pay 50%? If you do, why don't you say so? Instead of just saying, well, they're not paying their fair share without defining what a fair share is.
Well, when they say they're not paying their fair share, it implies that the poor, the people making less than that, you and I, are paying more. There's always this sort of little rub.
Well, we're paying more than our fair share if you follow that through, and they are paying less. All right, let's grant that. Tell me what the fair share is, and then we can go from there. It's kind of like the argument that you hear when you watch the TV news. Well, tax cuts. Well, No, the tax rate cuts. They're not tax cuts. You know, the rate determines how much tax you pay. So if you have a 10% rate when you have every one out of every $10 is paid in tax. That's the tax rate. But the Congress does not decide what the tax itself is going to be. They don't say, well, you're going to pay $100,000. They just say, this is the rate.
And then your income for that year depends on that.
Yes, your income for that year is taxed at that rate. Now,
and that's the piece Congress can't control because they never know how much income you're going to make or report or
that's right.
Willing to work for.
That's right. And the in looking over the tax collections for the years 2002 to 2008, the last year we have, taxes collected went up, including the taxes collected from that top 1%, even though their rate was cut. So they have paid more than they paid before. We can't know what they would have paid if the tax rates had remained in effect, but the taxes collected from that group did not go down.
Yeah. Well, I remember during that period of time, Vermont was collecting 10% more every year in revenue. And then the unfortunate part about governments is when you get more money, when the money's easily coming in, you grow your program. So, you know, and it always is nice to have more of this or that or the other, just like we would grow our individual budgets and, you know, buy more books, buy nicer furniture, whatever we want to buy, nicer car. But when the money's not there, you have to also make personal choices that you cut back. And the government seemed very reluctant because you're talking people now and people losing jobs and services not being offered. And so it does become hard.
Yes, it does. And it's going to be very difficult for Congress to deal with this issue because they're going to have to parcel out pain. Everybody's going to have to give a little. But if everybody is unhappy, perhaps that's a measure of success. But I sympathize with them because they're going to be pulled in all directions and, oh, you can't balance the budget on the backs of, you fill in the name. And it's going to be a very difficult task for them. But the other issue here that is sort of, and it's been mentioned, is the idea of entitlements. Social Security, Medicare, and various other entitlements which don't require an appropriation from Congress. Although Congress has, in effect, approved these because they passed the law that started it. Said if you're 65, you can get Social Security. Well, Social Security used to operate off a trust fund. And indeed, there is a special designated tax for Social Security. Unfortunately, it gets lumped in with all the rest of the taxes in Washington and gets spent.
Yeah, they balance their budget off of our Social Security monies they've collected over the years. If they hadn't done that, it'd be a viable system for a lot longer than 2017, which is when it's supposed to have a problem.
Well, one of the issues with Social Security was that it was started out to be a kind of a basic benefit. And you remember the woman up in Rutland who paid in 1 month and drew Social Security for I don't know how many years, 30 years or something.
Yeah.
It was like $20 a month or something, but the idea was that it would provide you with a little cash income. It wasn't meant to be a full retirement system.
But it's morphed into that
pretty
much, hasn't it?
It has.
And my understanding is that Social Security, they raise it, although at the last 2 years they have not given people a raise, but they've raised it based on the rate in which workers' wages increase, not inflation, not the cost of living, but what the rest of the workforce is doing. Which, are you familiar? Is that true?
Well, are you speaking of a specific, like the cost of living increase?
Yeah, it's only it wasn't quite based on the cost of living. It was based on wage increases or wage performance or something.